We are now going to look at two full examples which will show you exactly how to deal with process costing questions. So first, in example 6, the reason why this example is important is I'm going to show you the long and the short method. Now, what's important to note is the long method can always be used. But the short method can only be used when we meet certain criteria. Okay, so you're going to see the short method is much shorter, much quicker. If possible, you're always going to want to try and do the short method because it gives us exactly the same answer. So both of them over here are going to give us the same answer. So if you can take a shortcut and you can get exactly the same answer, why wouldn't you? Because sometimes you can't use the short method. So we will cover the criteria that need to be in place in order for you to use the short method. However, please note you can always use the long method, but you wouldn't do it if you could do the short method. Okay, and after we've gone through this whole example, you are definitely going to want to do the short method. So let's see. In example 6, we've got Emerald Enterprises manufactures a product in a single process. So in this example, guys, we are looking at a single manufacturing process. In the next example, I will show you how to deal with consecutive production processes. So where there's more than one production process. But for now, we are only looking at a single process, and they use a process costing system. Material is added at the beginning of the process, and labor and overheads are incurred uniformly throughout the process. Now, I just want to discuss this in a little bit more detail. Assume that this is our production process. The start of our production process, all of our units will be 0% complete, and at the end of our production process, everything should be 100% complete. Now remember, what are the three main costs that we look at when we are dealing with the valuation of our inventory? What do we include in the value of inventory? Direct material, direct labor, and our overhead costs. So what happens, guys, if we think of this as our manufacturing process? Let's assume that we're a company that makes denim jeans. So remember, the raw material that we'll use in our production process is going to be the denim. Now, what I told you in the question is that raw material is added at the beginning of the production process. So we add the denim at the beginning of the production process. But then we are told, okay, so material is added at the beginning of the production process. Labor and overheads are incurred uniformly throughout the process, which makes sense, guys, because what is your labor and your overhead costs? That is the cost to now take this raw material, this denim that we've input into production, and we need to take this denim and we need to convert it into a finished product, a pair of jeans. How do we convert our raw material from denim into the finished product jeans? We have laborers in our factory, we have overhead costs in our factory, and all of those costs are incurred uniformly throughout the process in order to convert my denim into jeans. Okay, so what's important to take away from what I'm saying over here is our raw material, or the denim, is added at the beginning of the production process, and our conversion costs my labor and my overhead are classified as conversion costs. So material is added at the beginning of the process, but my conversion costs are incurred uniformly throughout the process in order to convert my raw material into my finished product. Okay, just want to clean this up because we're going to be using this diagram over here quite extensively. But that's the first important concept that you guys need to understand. So make sure you understand that first sentence. Okay, materials added at the beginning of the process, labor and overheads, or in other words, our conversion costs, are incurred uniformly throughout the process. Then we have losses. Losses occur when the process is 40% complete. Normal losses are going to be 10% of the units that reach the loss point. So if we add this to our diagram, losses happen when the process is 40% complete. So as soon as my units get to 40% complete, I have a loss. And the normal loss is 10% of the units that go through that loss point. In this example also, we are valuing inventory using the weighted average method. Now you'll see in the next example, we'll look at the first in, first out method. Please note between the two examples, so here we're using the weighted average method of inventory valuation. In example 7, we are looking at the first in, first out method. We're going to have to put together a whole bunch of different statements, and the formats depend on how you value your inventory. So this is very important. The method of inventory valuation is very important for the formats. So please pay attention. In this example, we will be doing all of the formats for where inventory is valued according to the weighted average method. However, in the next example, we will look at the formats where inventory is valued on the first in, first out method. Okay, so it affects our formats. Let's see what other information we've been given. This is the information for January 20x6. At the beginning of January, so this must be my opening work in process. At the beginning of January, I've got 8,000 units sitting in opening work in process. I've got a few costs that they've given me. For now, please, let's just focus on the units. We'll look at the cost just now. And we know that these units are 25% complete. So we've got 8,000 units that are 25% complete. So if I go to my production process, my opening work in process, 8,000 units, 25% complete. Then we've been given some costs for January and some input information for January. So during January, how many units did they input into the production process? 87,000. And then they also give me the costs that were incurred during January. Let's just focus on the units for now. So I input 87,000 units into production. Then my work in process at the end of January, so this is going to now be my closing work in process. I've got 7,500 units that are 60% complete. Okay, so add everything to the diagram. It's just going to make all of your calculations just now so much easier. And then how many units did we complete in the period and transfer to finished goods? We completed 75,500 units. So that's my output. Okay. In terms of the required, when it comes to process costing, the types of things you can expect to be asked is to prepare the production statement, to prepare the production cost statement, and lastly, the allocation statement. So those are the three formats that you would need to study. Let's just answer this question over here before we move on. What are conversion costs? Remember, my conversion cost is my direct labor and my manufacturing overhead. Okay, so first, guys, we are going to look at our production statements and how to prepare the production statements. And what's important to note, guys, with the production statement, we only deal with quantities. There are no rand values anywhere on the statement. We are only looking at quantities. And also in terms of the solution, please note we are first looking at the long method. So first I'll show you the long method, then I'll talk to you about the criteria for the short method, and then we'll look at the short method. But for now, please note this is the long method, and the first statement that you have to be able to prepare is the production statement, which is only using quantities. Okay. So please make sure you just learn the formats. You need to have an input column, details, output, and then we have equivalent production, which is our material and our conversion. So you will see in process costing questions, we group together our direct labor and our overhead costs, and we treat them as conversion. All right. Okay, so learn your format. Then, what I want to focus on in the lecture, obviously, is not teaching you the format. It's more the understanding behind where all the numbers come from. So after watching this lecture, you should be able to put together all of this information. So first, we always start with the input column, always. And there's only ever two things that go into my input column. It's my opening work in process and what I put into production during the current period. So we're going to be using this diagram that we put together quite a lot now. How many units did I have in opening work in process? 8,000 units. How many units did I put into production during the current period? 87,000. So we can go and complete that information over here. Opening work in process, what I put into production, and I total my input column. Next, nothing else goes into that input column. Next, the total of my output column must equal the input column. So that must equal 95,000. And now all we're going to do is we are going to reconcile where these units are sitting. Are these units sitting in finished goods? Are these units sitting in closing work in process? Or were these units maybe lost somewhere in the production process? Okay, but we are going to reconcile everything that happened. So again, start with the easy things first, guys. Two very easy things. First, we know how many units did we complete during the period? 75,500. And how many units do I have sitting in closing work in process? 7,500. So do the easy stuff first. I completed 75,500 units, and I have 7,500 units sitting in closing work in process. Then I'm going to do the more difficult calculation where I determine what my normal loss is. Okay. Now, please be careful. In this example, it looks so simple. It looks like I'm just taking this 95,000, and we know that the losses are 10% of the units. So I'm saying the 95,000 units multiplied by 10% to get my normal loss. But please note, it's not as simple as that, and there's certain things you need to consider before doing that calculation. So it's not as simple as just taking this 95,000 and working out the normal loss based on that. It's not as simple as that. This is what I want you to do when you're dealing with the normal loss. I want you to take the total of your input column and then you're going to ask yourself two questions. Do I need to exclude opening work in process? And do I need to exclude closing work in process? Okay, so take the total of your input column. So in this question, what's the total of my input column? 95,000 units. Then I'm going to ask myself the following question. Do I need to exclude opening work in process? So what am I saying is, do I need to deduct the 8,000 units that I have sitting over here in opening work in process? Should I exclude them from my calculation? And guys, this is very logical, so please think about it as logically as you can. Go to the process that we have drawn over here. When do losses happen in my production process? Losses happen when production is 40% complete. That is my loss point. Okay. We are trying to answer the question of whether I must exclude opening inventory. So we need to know these units that are sitting in opening inventory, do they go through the loss points in the current period? That's what I'm asking myself over here. Those 8,000 units, are they going to go through the loss points in the current period? Easy. Those 8,000 units are sitting at 25% complete, which means I did 25% of the work in the previous period. However, in the current period, I need to now complete those units. So in the current period, I'm going to take those units from being 25% complete and I'm going to take them to 100% complete. So do these 8,000 units, do they go through the loss points in the current period? Definitely, because they're sitting at 25%. They need to go through 40% in order to get to 100%. So answer this question over here. Do they go through the loss points in the current period? Yes, they go through the loss points in the current period. So should I exclude it from my calculation? No, don't exclude it from your calculation. Those units go through the loss points in the current period. So when I'm calculating my loss, I must take those units into account. Don't exclude them, take them into account because the units definitely go through the loss points in the current period. Next question you need to ask yourself, do we need to exclude closing work in process? So what am I talking about over here? These 7,500 units that are sitting in closing work in process, do I need to exclude them from my calculation? That's the question that I'm asking. And again, we're going to follow logic and we're going to look at our diagram. These 7,500 units, do they go through the loss point in the current period? So it's the same question I asked over here, guys. Do they go through the loss point in the current period? Do these units go through the loss point in the current period? Look at your diagram. Closing work in process is sitting over here at 60% complete. So what does that mean? That means in the current period, I did 60% of the work, and in future periods, I'm going to have to do the remaining 40% of the work so that I can complete those units. Did those units go through the loss point in the current period? Well, this is what I did in the current period. I took them from 0 to 60, which means they definitely went through the loss point. So, in the future periods, when I complete these units, they're not going to go through the loss point because they have already been through the loss point in the current period. So answer the question. Do these units go through the loss point in the current period? Yes. So do you exclude them from your calculation? No. You only exclude things that shouldn't be included in your normal loss. If these units went through the loss point in this period, they must be taken into account when I calculate the normal loss. Logically. Okay. So look at the calculation. Very simple. That's the most difficult thing. Everything else is so much more simple after this, guys. So because we don't exclude anything, we're sitting here with a subtotal of 95,000 units. What is my normal loss? It's 10% of the units that go through the loss point. So it is going to be 9,500 units. And very easy, your abnormal loss is always just your balancing figure so that this reconciles. So that's my balancing figure. Now what we need to do is we need to complete these last two columns over here. My equivalent production for material and for conversion costs. Now, first, with the units that are completed and transferred to finished goods, you can learn this as a rule. This will always be 100% and 100% in each column. And the reason for that is these units, we always assume that we start and we end, or we start and complete. Let's use a better word. We start and complete these units in the current period. And in everything I'm doing, you can see I'm very obsessed about what's happening in the current period because I'm doing this production statement, guys, for the current period. So I want to know, do these units go through the loss point in the current period? Does this happen in the current period? What happens in the current period? I'm only interested in my production statement for this specific period. Okay, so that's, you're going to see coming through in all of our calculations. So what we assume, these units that we completed, the 75,500 units that we actually finished during the period, we assume that we start and complete those units in this period. So they are 100% complete for material and they are 100% complete for conversion. So that's what's going into those two columns. Then what we need to do for our loss is we need to go back to our diagram again and also just clean it up a little bit again. All right. So when we are trying to now look at those columns for our losses, it's very important to note where the loss point in your production process is. So in this example, my losses happen when my units are 40% complete. Now remember, right up front, I said to you, all of my material is added at the beginning of the production process. My denim, for example, 100% of my material is all added at the beginning of the production process. However, my conversion costs, those are incurred evenly or uniformly throughout the process. Okay, so what goes through the loss point? For material, everything is going to go through the loss point because all of my material, 100% of my material is added before this point in my production process. So because all of the material is added before this point, all of the material, 100% of the material is going to go through the loss point. However, guys, at this point, I've actually only done 40% of my labor and my overhead costs. I've only incurred 40% of my conversion costs. The other 60% is going to happen after that. So only 40% of my conversion costs are going to be affected by the loss. The other 60% are not affected by the loss. And that is where this information is coming through over here. For material, it is 100%. It's 100% for material because material is added at the beginning of the process. So all of the material, 100% of the material goes through the loss point for normal and for abnormal losses. All of my material goes through the loss point because all of the material is added at the beginning of the production process. However, for my conversion costs, at that point in time, I have only incurred 40% of my conversion costs. The other 60% happens after the loss point. So only 40% of these units can be affected by the loss, whatever came before the loss point. So for material, what came before the loss point? Everything. For conversion, what came before the loss point? I'd only done 40% of the work. So that's where those units come from. And then lastly, for closing work in process, if we look at closing work in process, it's sitting on 60% complete. So if closing work in process is 60% complete, guys, that means I did 60% of the work in this period. I'm going to do the other 40% in the next period. But what's important to note again, I've done 60% of the work in terms of conversion. But for material, I've already done all of the work because all of the material is added up front at the beginning of the production process. So for these units sitting in closing work in process, they are 100% complete in terms of material and only 60% complete in terms of conversion costs. And that's where that is coming from over there. All right. So guys, that is then your production quantity statement where we only deal with units. And you'll be very relieved that is the most difficult out of all of the statements. So just total those statements so that we have our equivalent units. And remember, why do we have to calculate equivalent units? At the start of the lecture, I said to you what makes process costing more complicated. The fact that we have opening and closing work in process and the fact that we have losses in our production process makes it more complicated. So we've taken the losses into account and we've also worked out equivalent production because of the opening and closing work in process.